Hey everybody, just wanted to say what's going on. So I wanted to give you an update this afternoon. I'm in my trading pod, or I call it the cockpit, right? Couple things. So we talked yesterday in that video about the channel that the spiders were trading in. This morning we gapped up, and it was a pretty big gap up, right? But ultimately what we've seen is the market come back in. Considering the weaker jobs data, the ADP private sector, that's a little bit interesting, especially with yields continuing to fall. And I almost wonder if the fall in yields is starting to make the market uncomfortable. Like, oh my goodness, we've fallen from 5% to almost 4%. Could we be maybe heading? Is this telling us we're heading into a recession next year? Which I ultimately think we are. I think yields are going to bounce soon, and I'm going to show you a chart on that. The other thing I wanted to tell you was just a little funny thing with my head trader here, Ben, right? So he was just saying, oh, I left so much money on the table on a trade. And I looked at him and I said, listen, to be honest, when I die, my gravestone is going to say, left so much money on the table. And the point being is that you never sell at the exact highs, you never buy at the exact lows. That's a trader's life. Like, literally, that is a trader's life. The point is, you just want to keep consistently taking profits from somewhere in the middle. But again, driving yourself nuts over taking the exact high or the low, it's not going to happen. That's one of the reasons why I use the DCA method to get into positions and get out of positions. So, all right, you guys, by the way, you can see how I dress when I'm not on interviews looking all fancy. I don't always dress like this, but again, I'm feeling little kind of chill mode today. So let's turn around here and get into the charts. All right, so number one, as we look at the charts here, and let's bring the charts up, this is a chart of the Russell. Now, this is catching my eye because the Russell, again, downsloping trend line. Look at that, pivot high to pivot high. Look at the high here, and look at the reversal on the Russell today. So the Russell has put in a high, potentially hitting a major pivot high and reversed. But remember what I was just telling you about the 10-year yield coming down? Look at this, guys. I gave this target in the game plan probably a month ago, and I said this is where yields are going. Basically 4.07 to 4%. Look at how close we are on this pivot trend line here, upsloping trend line meeting and converging. Also, look at this, slap in your 200 moving average. It's right there as well. So again, the yields should be getting to a point where we're getting towards the low. Now, the interesting thing about this is usually when yields fall, this is the 10-year chart for the day, this is the daily candle, usually we actually see the markets rallying, right? But again, we're not seeing that today, and that's something very unusual in the market. So again, it's making me starting to think that maybe some participants are starting to say, uh-oh, we've gone from over 5% to 4.117 here. Is this normal? Is something amiss here for us to drop on the yield this quickly? And that's the issue. The markets don't mind slow up, slow down when it comes to bond yields. It's the fast moves that are scary. All right, so going back to the chart on that, the other thing I wanted to show you guys is we're starting to see certain stocks give up their gains. I talked about the Russell. What's led this market? We know that some of technology, the big cap techs, have been under a little bit of a pressure. Microsoft, for instance, if we bring up the Microsoft chart here, we know Microsoft is off of its highs. Today it went up initially and has sold off a little bit. So the big cap techs are struggling, but some of these smaller ones, like a firm, right? Look at this. A firm was at almost $42, and it's now at $39.73. If this closes around $39.25 or so, you get a topping tail, and look at the parallel. This is stuff I love. I legit love this stuff. I'm trying to find something to kind of post here. I think I can do it right here. There we go. So what we can see here is, check this out. You have this area here. You have this area right here. You have this area right here. And then look at how you broke out. Use a parallel to this high pivot, and look, you literally are coming right back into that level. Look at the Affirm move. Incredible. UPST is another one here. Look at UPST hitting this upsloping trend line. Pivot right through here and right through there, and look, coming off of these highs. Now, the reason I bring this to your attention is that as we pull back off of these levels, it's starting to show that these risk trade setups are starting to falter. People are starting to take profit. And again, that could be a precursor to a down move in the market. So again, lots to kind of go over here and digest. But again, for me at least, this is where the fun stuff really is, right? Is understanding and monitoring the markets. And I've done a lot of talking today about trading. And I'm going to tell you guys flat out, like, obviously I make plenty of mistakes in trading. The only way, and by the way, that's no different than any other trader. Any trader that tells you they're perfect is definitely not telling you the truth. The only key is, again, managing position size. That's where dollar cost averaging comes into play. And then also position sizing, right? How much money are you putting into each trade to kind of mitigate, any sort of movement? Because again, the mindset of a true trader here is that, and this is the difference between a newbie and someone who's kind of in that early stage. When they go into a trade, they're thinking, okay, how much money am I going to make? When can I buy my Ferrari? When can I buy a house? When can I buy a boat? They're already counting their chickens, essentially. When I go into a trade, I actually go in thinking I might be losing. This might be the 1 or 2 or 3 times out of every 10 that I'm losing. And what it does is it keeps me more grounded and more conservative. And being conservative is actually the way to making more money, which again, I know is counterintuitive, but that's just the nature of the beast. So again, these are just little tidbits I try to pass on to you guys in these little updates that I'm doing here at my desk. But again, markets, interesting price action. I just want to show you again, lastly, the SPY, the S&P 500. We had this beautiful gap up, and I want to show you again this here, guys. Bear with me as I bring it up. But basically what we have here is, and there it is, remember this from yesterday's video? And look, remember that today we gapped above it. Look at what we just hit, and we're bouncing off of it. So when this line, but it's more when this line breaks, now nearing 456, it's actually this upsloping trend line's around 456. If that breaks and confirms, I think that begins that next sell-off down to 440. Interestingly enough, you want to know something fascinating? Max pain for options X next week, which I think is quad witching, is 440 on the SPY. Just food for thought right there, guys. But again, on that note, I want to bid you farewell. Thank you for tuning in. Thank you for spending some time with me. I will continue to give you guys these insights. Have a great rest of your day. Take care.